Welcome back to Real Estate Without Borders. My name is Daniel Foch. I'm joined here by the wonderful Dave Hutchinson. How's it going, man?
Everything's good, man.
Is it?
Everything's great.
Except the stock market. Did you
Except
lose
the
any money
stock
in this?
market. You know what? I didn't look. I'm not one of those. I can't. It
A wise
consumes me,
one.
man.
That's
Yeah,
good.
it
Yeah, no, I
consumes
mean,
me.
to be honest, if you're investing properly, like you shouldn't be looking because like it's an investment. It's not a job. If you're looking and you're trying to plan your ins and outs, then it's you're a trader, and that's more of a job.
I have a good amount in a lira from the fire department, a locked in retirement account. Is that what
Yeah,
that is?
yeah.
So I have a financial advisor monitoring that. He sends me emails from time to time. I scan it. I'll glance at it, give it a look and see what's going on. But I mean, for today's episode, I honestly see it affecting the real estate market globally because I can give you real examples of clients that are affected not only in Canada, but in Tulum, Mexico as well. I've had 2 clients in Tulum back out of transactions over the last week or so because they were actually planning on using funds from the stock market to purchase. So the uncertainty and their money has gone down. And then I've noticed a huge drop in active buyers when it comes to the listings that I have up right now in Toronto. 3-4 weeks ago, it was freehold properties. Any well-marketed, well-priced freehold property was doing really well. And now it's tough to even get showings, to be honest.
Yeah, 100%. And I think you're hearing that in the US as well. I just did an article in Bloomberg about it in Canada's market. Tariffs are definitely weighing on housing markets around the world. I mean, we're seeing news of it in the UK. Basically, most economies are saying that the biggest risk to their housing market right now, their real estate markets, and their economies in general, is this trade war. And a lot of it is because it's creating a degree of unpredictability around are we going to have jobs, right? Like people aren't going to buy they're not going to commit to a major financial decision if they don't think that they're going to have stable employment for the next 12 months, much less the next 5 years.
True.
So yeah, so let's talk a little bit about the trade war. Let's just kind of like give a rundown of where we are. So today is Wednesday, April 9th. This is when the episode is going to be going out. Basically, China has retaliated to the U.S. with an 84% tariff on U.S. goods amid the trade war. The U.S. responded with 104% tariffs on Chinese goods.
Is that taking effect today or last night?
I think it was like midnight. So, what does China actually buy from the U.S., right? Because they don't consume a lot of U.S. goods. They do consume a lot of U.S. agriculture, right? So the U.S. is like a huge agricultural producer. It hurt farmers in the U.S. probably.
From what I saw something with Kevin, I sent it to you last night, the Kevin O'Leary explanation of what's happening. And I think it's interesting because his take on what's happening with the tariffs in China and the US is a lot of it's backed by, or a lot of the underlying issues that maybe most people aren't aware of are like the impractical or maybe not so liked business procedures that the Chinese government has in place for US companies. Yeah. So I think this is a lot deeper than what most of us are aware of. Like I think these tariffs are there's so many different factors that go into these tariffs that when I see people arguing online, it's like I think it's very deep rooted into many different issues. And one of those with China being like, business procedures and all that stuff, that's kind of maybe an unfair practice. And Trump's trying to set him straight, maybe bully him around a bit.
Yeah, I've heard that that's sort of a big part of it. And also like the reason why they put those tariffs on all of the surrounding areas is because, China would basically just send goods through like somewhere nearby, right? Another Asian country that wasn't subject to tariffs, because China's been subject to tariffs for a long time, since Trump's first presidency. And then they added, and Biden never got rid of them because why would he, right? So,
Am I correct? Is there only 2 countries that have retaliated? Canada and China?
Yeah.
Crazy.
It's hilarious. Yeah, there was that I guess you saw that image from like, is it Fox or something? Yeah.
I was going to send it to you, but what's funny? It was on my phone to send to you, and then I refreshed my page and never found it again. So I was
yeah, it is funny though. It's
China. China in response to the tariff. So China has imposed tariffs on 3 billion U.S. goods, including a 25% tariff on pork, aluminum scrap. Let's see. China hit back with 60. Oh, sorry, someone keeps calling me here. 60 billion of U.S. products like soybeans, 25%, cars, LNG, targeting U.S. agriculture, manufacturing sectors. And they hit back with a What's the 104% part? Can you explain that?
You'll have to repeat that. You froze for a sec.
Oh, sorry. Can you hear me?
Yep, no problem.
What happened with the 104% tariffs? What's that about? Can you
Trump
explain
just,
that?
yeah, so China escalated and then Trump escalated back. Like he kept saying, like he's trying to, so he's basically said to everybody, if you retaliate, I'm just going to increase it. And so I guess he had to be true with his word.
Fair enough.
The crazy part is like, so China's chosen to participate in this trade war. I think that they maybe think that they can win. And it seems to be like there's also some sort of, capital war going on as well, where basically China, like, US bonds. So, we talked about this early on the show, right? Like before this was a mainstream thought, you heard it here first, folks, that Trump's team was trying to get the yield curve down on the 30 year, to 3.5%, so that they could refinance all of that government debt at a cheap rate, or I don't know if there's a 10-year or 30-year curve, whatever it was. But China is dumping U.S. bonds, which means that U.S. bonds are getting cheaper, and so that means that the yield is going up, right?
Okay.
Go ahead.
Let's do this let's use crayons for this one, okay? Because this is really important, I think, for the realtors to understand that follow us, okay? The bond yield is directly related to interest rates related to mortgage interest that the consumer that's purchasing real estate would have to pay, correct?
Yeah, correct.
Okay, so what Trump is trying to do is to get bond yields down so that they can refinance USA's debt at a lower interest rate.
Correct.
But that will also be, I guess you could say, I don't know if it's beneficial or not, in the real estate world, beneficial because it's going to drop interest rates for consumers looking to purchase real estate, we think.
Yeah, it would have that benefit. Yeah. I mean, I don't know if it'll be, I don't know now that we're seeing what it takes to get there. I don't know if that will outweigh the negatives, but yeah, you would end up with lower mortgage rates as a result if the yield curve gets lower. Yeah.
More sales. No, I'm kidding. But
well,
I think
it would probably result in more sales to begin with, and that because more people can buy it. Assuming that their confidence comes back, but lower rates would help people's confidence come back because now all of a sudden, when they think about what they're paying monthly for a house, the economics improve for them, right? So if I'm worried about losing my job, I'm a little bit less worried, and because my interest rate is 100 basis points less, so. I could maybe lose my job and still afford this house.
Fair enough. When was the last interest rate change? I guess has there been an interest rate change in the US over the last couple of years?
Like a cut from the Fed cut 50 bips right before, like in September, I think. Which has been pretty politicized because they said, are they trying to make it easy for the Democrats to win?
Right.
Which I don't know. I mean, I think the Fed's pretty independent personally. But yeah, so they did cut, but they haven't. That's about it, right? So whereas you get most other Western countries have cut, 100, 200 basis points.
Right. And we have another announcement coming up mid-month, April, which I think it's like back in every article I read is different. I see some articles mentioning they think a rate cut's coming. I see some that say no. What's your
flip-flopping? I would say it's a coin toss at this point. It's probably 50-50 chance. I think that it's going to vary based on the data that comes out.
Yeah, I don't think that's going to have any like immediate effect on at least on the Canadian real estate market. I can specify Toronto. I think consumer sentiment right now is still very low. And I think it's actually interesting because a lot of people probably aren't really aware of what's happening. They just, they get the surface level information and base their entire decision based off of what they're seeing, very surface level without any like in-depth analysis. Like the real estate is so heavily influenced by the media. It's crazy. There's so many factors, but I think honestly, the media has a huge, huge factor in terms of what buyers are doing, especially in Canada.
100%. And I would say that the stock market is very much tied to that, right? So it's interesting because there's that article I was mentioning, it just came out. It says Toronto home sales plunge as trade war hits consumer confidence. And that's really the story, right? I mean, like, again, you can empathize with buyers. In Canada, we have the trade war, which has completely overshadowed the fact that we also have another layer of uncertainty, which is a federal election, right? I mean, like, nobody's even paying attention to the election anymore.
It's
the
true.
last couple of days, which is probably, for the benefit of both of the candidates, because neither of
They
them
get a
seem to be
break.
campaigning. Well, neither of them.
Okay, so give me the simple answer of what's happening in the stock market and how that would affect a consumer other than the obvious of if they have funds in that, like actually in the stock market. Like
Yeah.
I know it's sentiment, but can you give us a quick rundown on what you're seeing, what's happening in the stock market, and why you think that's happening?
So, well, I think it's happening because, okay, so what's happening in the stock market is volatility. I mean, it's down generally on a downward trend, but today, again, April 9th, if I look at the S&P right now, what's it doing? It's up, but it's been bouncy, right? It was down like when we started this episode at like 11 a.m. It was down, and now and retail is basically buying that up. It's up 1% since that bottom. I'm gonna screen share this. This is funny.
Yeah, pull it up.
To do some big Google technical analysis here. Yeah, so you can see. I mean, look, it started the day down, and then it basically jumped up. I don't know, like 1.5%, dropped almost 1%, went back up 1%, and then dropped 1.5%, and now it's up again 1%. So, that's what you would call volatility. I mean, if you were a good trader and you're sitting there watching at your desk, you could probably make some pretty good moves on that.
And then okay,
Yeah, go ahead.
now this is all, like, again, like we just talked about, this is affecting the real estate market. How are you seeing this affect the real estate market, like from your side? Because the cool thing about this podcast is we're obviously both super tied in with real estate, but we both have like a different perspectives on everything. So it's kind of cool, like, to get your perspective on what you're seeing.
Yeah, so the way I see that this will impact real estate is, I mean, typically you get what you mentioned, the negative wealth effect, right? So if I was planning to buy a house in Tulum or Toronto or, London or Dubai, but I, had my entire down payment or maybe all of the cash that I was going to spend on that property, period, sitting in stocks, I don't have as much money anymore. Hence my buying power just got eroded, right? And so, maybe my buying power got eroded by 10 or 20%. And so I can pay 10 or 20% less than I could 5 days ago. And that reduces the actual capital of the buying pool by 10 or 20%, assuming everyone is invested in stocks. But not everyone is invested in stocks, right?
Right.
And so some people are invested in other things, or they just have it sitting in cash. And those buyers kind of offset that risk a little bit, but their confidence matters, right? And what the other piece of what happens when the market starts getting volatile like this is people are like, nah, screw that. I'm just going to chill until things look like normal, because, this seems scary. It seems like we could see a recession, maybe a market crash, more job losses, a trade war between China and the US continues. None of these are, give you the warm and fuzzies about the economic picture for the next 12 months. And so you're just like, I'm just not going to buy, right? I'm fine. I'd rather just pay rent for a year and lose whatever, if you're paying $3,000 a month in rent, I'd rather just lose 36,000 in rent than potentially lose hundreds of thousands buying a property that later gets smoked by whatever happens in the economy in the next 12 to 24 months. So that's where that sentiment shift is happening and is very apparent.
And then we also, so we have obviously money in stock market, which is affecting people. We have the consumer sentiment, which is people not being overly confident in the entire economy, not looking to buy. And then the last thing I want to just say, I know the US Treasury yield and the bond yields. We talked about this, and I think I want to like make it like so clear for the realtors to understand, especially because it's similar in the US and Canada. No? Same thing.
Yeah.
So
which part? The bond side?
Right.
Yeah. Yes and no. So like it's a little bit different in such that in Canada, like we don't have a demand for 30-year bonds. Like the US is really the only country that can sell 30-year bonds because they have such a stable economy and the reserve currency of the world. Some other countries have close, but not like the US. So that's why the US has 30-year mortgages basically. In Canada, well, also banks in Canada are prohibited from doing it, but the way it works is like a government can lend money to two parties, right? They can either lend money to you, Dave, the guy who wants to go buy a condo, or they can lend money to the U.S. government, right? And the likelihood of the U.S. government, I mean, the U.S. government can just print money to pay the mortgage. So that, you know, they're I'm probably going to give them a better rate than I'm going to give you, because you don't have that ability to print money to, you know, and most sovereign states can also print money to you know, bail out the loan. You know, the banks or financial institutions, hedge funds, other governments that are lending Canada or the U.S. money do so by buying their bonds, right? A bond is I give you, you know, I give you $1,000. You give me a piece of paper that says you're going to pay it back, and you're going to pay me X amount of interest on it between now and then.
Okay, understood. The 10-year Treasury yield, okay, yields have risen. 30-year mortgage rates are hovering around 6.5 to 7% right now in the U.S. So let's see. For example, on a $400,000 loan, a jump from 6 to 7% is about $150 to $200 on monthly costs. Okay, understood. Are you seeing this have any effect on the rental market? I wonder, I know in Toronto specifically, we're kind of seeing a down rental market, but I think long term, maybe in the next little bit here, we might see the opposite as buyer confidence and buyer sentiment maybe drops. We might see maybe that rental market pickup. I know it has a lot to do with immigration, but I think just in terms of like sentiment, in terms of actually purchasing a property, do you think maybe it's fair to say that the rental market might start to heat up again as buyers are more nervous?
It could a little bit, yeah. Like I would say that none of the factors that we just discussed are really positive contributors to the rental market.
Right.
So, you know, I mean, there's those negative factors, but then, yeah, I mean, if you see a significant enough drawdown, then people start selling their houses to rent, right? Or, you know, people are losing money and they
Right.
go to rent because I think the rental market's relatively insulated, probably more so than house prices. It's also already seen a big drop. Like rents have been dropping for like 2 years now, right? According to, like, in Toronto, at least, according to rentals.ca report. So, I mean, like, are you going to see that much more drawdown than has already happened as a result of the Canadian population falling by like 400,000 people over the last couple of years? Probably not, right? Like the chances of you really getting much more than that, you'll get some, I think, but maybe not much more.
I wonder if the effect of this stock market volatility is obviously due to the tariffs. They push investors that would maybe more consider stocks a safe asset. Maybe this whole uncertainty and the volatility of the stock market may push investors to real estate. You know, because they're seeing, especially with where the real estate market is in certain spots, maybe this could prop up demand for investors, especially for like multifamily or even vacation homes to an extent. The people that maybe are doing okay with their stocks. What do you think about that? Like, do you think that this volatility could maybe exit some people from the stock market, get the investors maybe more interested in real estate? Maybe.
Yeah. So yeah, that's like a pretty decent thesis. Like there's a phenomenon called flight to quality that happens. So people
Flight to quality.
Yeah, flight to quality or flight to safety. So people like will rush into safer asset classes when stocks and equities are becoming risky, which they are. So usually they would go into bonds, but bonds are also risky right now.
Right.
And so, you know, I mean, and I'm talking about like large, like hedge funds and stuff like that. So I'm not really talking about the marginal investor, but like, you know, the regular investor would probably do the same thing. I mean, we've noticed an uptick in people interested in real estate as the stock market starts to get scary, right? Because they're going back to like, let's think about what makes sense again. So that, I think that's a big piece of the puzzle right now is are we going to start to see people saying, screw this, I'm getting off this roller coaster for a bit, I'm going to go back to real estate because, you know, prices are down and it seems to be, and if mortgage rates start to improve as a result of the whole thing, you know, it could be a good setup.
Yes, but I think I know there's a lot of pressure. What's his name? Jerome Powell. He's is he Artif Macklin, whatever, essentially?
Yeah, exactly. Yeah.
So there's a lot of pressure on him to drop rates, and I even see Trump like tweeting about him or messaging, you know, putting direct messages out there, basically.
Yeah,
And I think there's a lot of like the difference that a lot of people, maybe if you're in Canadian real estate looking into American real estate, it's like I think most people aren't aware of the fact that the reason they're seeing such, well, not the reason, one of the reasons they're seeing such low amount of transactions because no one's moving, because no one can afford to move. It's kind of similar in Canada, but you have
for
to
sure.
understand that with 30-year mortgage rates, like people are, why would they, if they're locked into a low rate, they can't sell, which is driving down prices. But if those mortgage rates come down, it will be a good thing for the real estate market because they're going to allow people to move up, put their property on the market, maybe sell it for a decent price because buyer demand will pick up. So it's like tying this all back into real estate and the trade war. It's hard to keep up, but it's honestly a full-time job keeping up on I'm on Twitter more than I'd like to admit, just trying to keep up with all the different tweets and what's happening and the rise and the fall of the stock market every single day. But I mean, to wrap up my point, it's all tied in together. And I think it might be a little bit of a rough point here for someone from US people. It might be, and Canadians as well, globally. I think it might be in for a little bit of a rough go over the next little bit, but I think there's light at the end of the tunnel. Maybe. I think there's a plan bigger than us. So
You would certainly
I don't know.
hope so. I mean, there's this statement from a guy named Alan Moore. He wrote the book Watchmen. I don't know if you're like into graphic
No,
novels, comics, all that stuff. It's a
heard of it though.
yeah, Watchmen's like yeah, they did a movie on it. There's a great TV series on it as well right now. Anyway, he has this quote about like how, people want to believe in conspiracy theories because it's comforting to imagine that somebody is in control of the whole thing,
Right,
you know?
right. Fair.
And the truth is far more scary that we actually are completely out of control and that, the world is just fully rudderless and nobody is steering the ship. And that's, I don't know. So there's that. There's that take as well.
There's one thing you said on like a few episodes ago. I think we were on the topic of immigration, to be honest, but it was I think we would all feel a lot better if someone just told us like, look, this is what's happening. This is the plan. We're going to go through this, but the outcome's going to be this. Likely, we're doing this because of this. But I feel like there's just no clear message, and the no clear message just stresses everybody out and puts everybody against each other. But yeah. What about, I'm curious, your take with this whole stock market and the trade war. I think a huge challenge is going to be on the supply side with rising construction costs, tariffs, up with aluminum and all that kind of stuff. Are we going to see a slow, like I know in Toronto specifically, we haven't seen many condos be built in the last, new starts anyways. You're going to see this trend continue into this 2025 year?
Yeah, I think there's so many competing factors at play in the market. I don't know, man. It's so hard to imagine what anything looks like even like a couple of months from now. You know what I mean? Like,
yeah, of course. I mean, look at I think everything is a gamble. I think that if no one's building right now, we're gonna go through a couple of years of some tough times. I think we're in for a little bit of a rough ride for the next couple of years. Nothing too crazy. I hope. I knock on wood. Nothing too crazy, but I think eventually we'll get through this. And if there's no new construction being built, it's really just a waiting game for the people that own property right now that are maybe struggling. It's like, just hang in there if you can, because I think there is light at the end of the tunnel once we get around to this, maybe in like 3 to 5 years, hopefully.
yeah,
I was thinking.
I think
Go ahead.
when I look at like the whole global financial system and like countries like Canada or like the US and stuff like that, we have a lot of debt. We have a broken financial system that's not working for people. I think that the worst outcome here is actually the best outcome for the long term. And that's kind of like the way that I think about it without being too like negative about it, is that like there's a decent chance right now that like the whole thing just burns to the ground. Like that actually seems like it's like greater than 50% chance, or like close to 50% chance that ends up being the outcome. Like that these folks just can't figure out a way out of this, right?
Yeah.
And that might be a good thing, like that would hopefully allow us to rebuild a better system that isn't bad. That would be it. Like,
Right.
I think that would be a really nice outcome to see, to be honest.
The big reset of 2025.
Yeah, something, whatever
We've had a tough
the
go,
WEF
man.
things say, build back better. Is that what it was?
I don't know. I just need a break. I feel like we've been through it in the last 5 years. Since the pandemic. It's just been nonstop emotional and physical roller coaster of emotions. And we're just trying to sell real estate, and we just keep getting thrown these crazy hurdles. I actually saw, for the realtors out there listening, since I'm the positive one, I'm the silver lining guy. People have to still move. Okay. There's still people that got to move. And I think a lot of people get so caught up in like what's happening and trying to like come up with solutions. It's like, I think you just got to focus on what you can control and keep helping people sell real estate and buy real estate. And it's like, what can you do? What are we going to do?
I agree. Like, I think that's, I mean, the one thing about this industry and this asset class is that people still need a place to live, no matter how bad the economy is. If you're thinking residential real estate investment, businesses still need a place to operate out of. Robots still need a place to operate out of. AI servers need a place to exist in. Like, physical space, until we've completely transcended the physical world, which I think won't happen in our lifetime. Could happen, like, in another, like my kid's lifetime, like, the Matrix or whatever. Until that happens, real estate is still very much there's a play there, right? People need places to work, they need places to buy goods, house goods, live, etc. And so the industry will keep moving. It is going to be impacted by sentiment, by the animal spirits of the market, by what happens with stocks and all that stuff. But it's still, like you said, like, we still have to do our jobs. We still have to help people find houses. People still need to, they have changes in their life. Their kids, they have more kids, or they have to upsize or downsize or whatever. I mean, downsizing is still going to happen. Boomers are still going to, if anything, maybe boomers are probably going to downsize. They're more likely to downsize now because they all just lost a bunch of money in stocks that they were relying on for their retirement. And now they need to pull some equity out of their house and go move into a smaller house. You know what I mean? Like, all of these things still happen because people need to consume property.
I agree. Look, I've always been, I think realtors, you need to tie this into like the stock market and everything in real estate. Like, realtors, you need to be up to date and aware of what's happening in the economy and what's happening globally. It's super, super important. But what you also need to keep in mind is that you can't control everything. And my advice to you is that, we don't know where the market's going. We don't know if it's going to be really good or really bad, or we don't know what's going to happen next. We don't know what elections, there's so many different factors that lead up to this. And it's like, all you can do as a real estate professional is just listen to this podcast, obviously. Listen to Foch, listen to me. You got to analyze every single little piece of everything just so you stay educated as an educator, because that's what we are at the end of the day as real estate professionals, is educators. So you have to be up to date on what's going on so you can help with your client get the best results possible. And you do that by being educated, because it's not always a good time for everybody to buy. It might be a really bad time for someone to buy.
What? I thought it was always a good time to buy and sell.
Yeah, for most realtors, it is. It really is. But that's the thing. It's like, you have to just be like, we do this podcast and Foch does all his stuff because it's like, it helps you become a better realtor. And it's just, with that being, with a grain of salt, you have to just keep doing what you're doing. A lot of realtors I get messages all the time of people being like, "Oh, it's just so bad. This is why I can't do that." It's like, if you stick to the things that you're doing, even if it's crappy for the next little bit, it's going to get eventually a little bit better at some point. There's only up from here. So if you keep doing the right things, it's going to come back around, and you're going to be prepared to be really wealthy and very successful if you just stick to doing the things that you're supposed to be doing, things that you can control.
Yeah, and that's the thing, right? Like, even as an investor, if you're somebody who wants to invest in property around the world, what what can we control, right? We can't control the stock market. We can't control what China and the U.S. policymakers are going to do to each other, right?
Right.
What can we control? We can control the price that we pay for a property, right? We can control whether or not we start looking or stop looking for a property. We can control to a certain degree, who our investors are, where we're getting money from, are we borrowing money from a bank? We can control our leverage point when we buy or sell. Like, there are so many variables that you can control to still make good real estate investments in a bad market. And I think when you start to see significant drawdown events like this, where the global economy is really shaky, and you say, and in 10%, it's like, look, people were piling into U.S. real estate and Canadian real estate and whatever when prices were 10 or 20% higher than they are right now. and now we're
Right.
prices are 20% lower and nobody's buying. Why is that? Well, you could say mortgage rates are low or are higher than they were then. Okay, cool. So people weren't really actually buying the price. They didn't care about the price. They only cared about the mortgage payment. Okay, maybe that's the case. Is that, if that's the case, couldn't we buy stuff at relative discounts right now, understanding that in some future period of time, if rates are back to where they were or whatever, we know that the market is willing to pay that price. We've seen it, right?
Right.
So I think that there's always a good opportunity to be created, but good deals don't just sit there on the market. You know, and you can't just, there's not just going to be some period of time when the market's at like a bottom, you might say, and everything on the market is a good deal, right? There's still going to be shit deals and there's still going to be good,
Right.
really great deals, just like there would be today. And if you're of the opinion that the whole thing's going to collapse and prices are all going to come down 10, 15, 20%, then you should go and be lowballing people 10, 15, 20%, because, you know, if you get it now, real estate's a yielding asset. If you own it sooner, you're better, right? So that's my 2 cents on the whole thing.
No, you're right. It's true. And you can get away with some of these low ball offers right now. Like it's common. It's so true. There's always going to be good and bad deals. You know, there's always certain properties that are better than other properties. So it's like, yeah, I can talk about realtor sentiment forever, but I think understanding, I'm glad we had this talk today, because I think one of the things a lot of realtors are unaware of is, especially understanding like bond yields and mortgage interest rates and all that kind of stuff and how that ties into the stock market. I think we can all, at a very high level, talk about how the stock market obviously is affecting us and how it's affecting our clients from a super high level, just from those three things we talked about. Having money in the stock market, obviously stock market not doing good, they have less money, they can't buy. Consumer sentiment, which, you know, is a huge thing, especially with the media, because a lot of buyers, especially maybe not seasoned investors, but maybe new investors or first-time home buyers, they're getting their media just very high level. You know, headlines is what they're reading, and that's it. So buyer sentiment is down, and just being cognizant of what's happening, so you can be a step ahead. And I think it's cool that we're doing this. Like, you got to check out our episodes, because I really think we're, like you just said, Foch, is like opportunities can be created right now. And where an opportunity may lay with real estate is providing above and beyond value to your clients and customers. And it's like, you do that by, can I say customers anymore with Tressa? I don't even know.
Depends.
Clients.
If you have depends what type of service agreement. Do you have a fiduciary duty with said
Self-represented.
individual?
Actually, I'm in the middle of doing my education update right now, and it is horrendous, but it's good to do every 2 years, because I'm a broker. So because I'm a broker, I have to do like more educational updates. Good times. But there's a lot of opportunities right now to be created, and maybe that opportunity is understanding international real estate and maybe getting into it, diving into understanding what's happening globally, understanding what's happening in certain markets, and maybe presenting those opportunities to your clients. And that's why we made this podcast in the first place, I think, and to help investors. But I think a lot of our following is realtors, realistically.
Yeah, I think so, for now at least. I mean, this probably a big piece of that is just like, it doesn't really feel like a lot of people are out like looking to make real estate investments right now. So, you know, I mean, we've got a couple of like reviews from people who are like looking to, you know, buy real estate, and there is a record number of like Americans actually searching for citizenship or like extra citizenships in other places, and real estate's a big way that people actually do that. So I think we're starting to see that. But yeah, I think like probably, you know, you and I have a pretty big realtor following, and also realtors don't like have a lot of time on their hands right now. So that's probably a big piece of why I'm trying to think of how I can say that diplomatically, right? But
Nailed it, dude. You're
yeah,
good.
but I mean, look, they're all busy making AI memes and stuff like that, starter packs, whatever.
I'm waiting for mine, dude.
I know,
I'm
yeah, I
still
don't know
waiting
where
for
it's coming. I
mine.
gotta talk to the marketing department. I sent like so many good thoughts, but no, they've all decided they're in the cloud right now.
It's processing. You know, actually, and I'm going to give Valerie a shout out. The first AI Canadian real estate brokerage. I don't think we've talked about it on the show, but I want to give it a shout out, because I was having a conversation. Actually, it's pretty funny. I should send it to you, Foch. So this realtor reached out to me. He's probably watching this episode. He reached out to me and said, "Look, I've been following you and Foch for a long time. Anything that you guys are putting your names on, I think obviously is something that would be really, you know, good for realtors." And he said, "But what can this do for you? What can Valerie do to make me a better agent?" And I rattled off a few things, and he said, give me an example of how the CMA works." Okay, so Valerie has this. I don't even have access to it yet. I've only seen it when Shem sends it to me, one of the founders. Okay, the CMA that Valerie is producing is pretty bang on, dude. Like,
Yeah, it's good.
And it's so in depth that not only would the CMA help you on the listing side, but with buyers as well. But on the listing side, it's like it comes across as it's just so unbiased, because obviously that's something that's an uphill battle for realtors, is gaining trust. And you want to, how amazing would that be to walk into a listing appointment and be like, this is what a computer says. Like, it's not, and a smart computer, like, not me. I don't think your house is worth this. It's just a computer. Sorry, it's not worth 7 million. It says it's actually only worth 1. But anyways, this guy was like, I don't believe that CMA is good. Can you send me the CMA? And I said, yeah, sure. Tell me your property and I'll send you the CMA right now. And I said, if I send you the CMA and it's exactly how good it is, I'm going to send you a contract to sign on with Valerie also at the same time. And so the CMA takes like 10 minutes to make ish, right? Because it's so in depth. I didn't know that. So this guy's like, he's like, why aren't you sending it to me? He's like, his actual message to me was, is Foch just pulling comps in the background?
So funny.
Trust me, and Foch got a
I
lot
haven't
of
done
things
CMA
going on.
in like fucking 10 years, dude. So
I was like, yeah, Foch is just putting together this beautiful CMA just for you.
Yeah.
You can come and check out what Valerie has to offer. But he was serious. It was good stuff. But anyways, we got some cool stuff coming in. But I think we crushed this episode about what the stock market's doing, how that's affecting you, what you should need to know as a real estate professional to provide value to your clients, and just to be a person, especially on social media. We all want to be educated on social media, so you don't have to just copy and paste Foch's videos.
Yeah, everybody just shares my shit on their stories now.
That's my favorite thing, man.
Yeah, I know. It is funny. It is funny for sure.
But awesome. Cool.
Yeah, I just got to figure out a way to charge for that.
There's got to be an Instagram feature per reshare. You should be getting paid like a couple pennies. Something like that.
Yeah, they should have that, yeah. I could, I guess I could start a subscription where I just give people exclusive beats, right? Like, oh yeah, pump this piece of content. That's good news.
We're on to something here, Foch.
We'll figure it out for sure. I think Valerie's the way, man. We're just building a sick brokerage. Get everybody to join it.
Good stuff.
Yeah.
Cool.
Okay, let's wrap it up. Thanks for listening. Leave us a review. Share this with your mom. Maybe press the play button for the whole playlist on like 2x speed, mute your phone, fall asleep for a bit, so we get a bunch of listens. No, just kidding. Share it. Leave us a review. Let us know an episode that you want us to do. Recommend a guest. If you're an expert in any market around the world in real estate in that market, we'd love to hear from you. We want to learn about, like, this is our goal, is like literally to learn about every single real estate market around the world in depth, to advise people with money. Now that apparently we're having a trade war as well as a bunch of other stuff that's going on, people want to move their capital around. They want to get exposure to new economies, and real estate's a really amazing way to do that. So help us share the knowledge, and give us a shout if you want to come on and talk about your
cool